You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. What are we going to talk about on the show this week? Is it ags? Is it metals? Is it equities? Is it energy? Is it crypto? Is it livestock? You never know. You got to tune into the show each week. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting network upon which so many of you are mainlining these days. Remember, if you like what you hear, throw some stars, throw some likes, whatever your platform allows you to do. If you're using our mobile app, throw some stars in the App Store, however you get our content. We appreciate it. It does help new people continue to discover the content out there. And of course, if you want to discover more content in your lives, including our pro members right now already have access to a segment that's going to hit this podcast in a little bit. Of course, I sat down earlier. It is Russell Recon time, listeners. So we will be joined in a little bit in the old CME Group hot seat by Miss Catherine Yoshimoto, our old friend out there, the Director of Product Management over there at FTSE Russell. As you might imagine, Recon time, the folks at FTSE Russell pretty busy, so we had to record that outside of our usual TWIFO recording time. Luckily for all you pro folks, you already have it in your pro podcast feed, so check it out for yourselves. The rest of you listening to the podcast on demand, you will get that cut into the end of the show when it hits the podcast feed. If you want to be one of those cool cats who gets early access to content, also gets exclusive pro Q&As, got one coming up a little bit later today with the options guy himself, Mr. Brian Overby, answering all of your questions about these crazy markets out there, as well as, of course, options oddities every week as well, breaking down the week that was from an unusual activity perspective, as well as live access to this, everything else we do on the network, of course, the pro exclusives, as well as, of course, the giveaways, the pro trading crate. Only one place to go to find all of that goodness and a whole bunch more. TheOptionsInsider.com/pro. Nearly 200 hours, actually over 200 hours of content waiting for you the second you hit that join button. So prepare yourself, strap in. We got a lot ready for you. TheOptionsInsider.com/pro. As I mentioned, I'll be joined in a little bit in the old hot seat by Catherine Yoshimoto. But now it's time for me to take the reins as we enter the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
Welcome to the Movers and Shakers report, the portion of the show we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. If you want to see this report for yourselves, give us a follow on Twitter at Options or follow the CME over there at CME Group. We both tweet it out right before showtime. Again, it's one of the few premium reports from Bantix you folks get access to because we like you for free. If you want to see the full suite of offerings, Bantix.com, Bantix.com is the place to go to kick the tires and light the fires. Tell Nick we sent you. He'll be super excited to walk you guys through the offerings there. I'm looking at you folks in the live chat. I see you there, Nichols. He's excited. He says, let's go for TWIFO, baby. Yeah, I'm excited too. Everybody's excited when it's TWIFO time. So let's get into it, listeners. Again, I get to pick this week. Always fun for me. A bit of a dark side skewing week, which may surprise you, given that there has been a lot of green in the conversation out there of late. But this week, looking dark side, of course, the top light side movers, pretty strong. But you know me, listeners, I like to go dark side. So let's go there first. Some surprises there as well, including our number 5 to the dark side. I don't believe we've ever discussed this product, or really these suites of products, on TWIFO before. Number 5, off nearly 3.5% to the dark side this week. The real estate sector product over there at CME. You might be saying, what the hell are you talking about? Well, they do have these E-mini Select sector products over there at CME that allow you to trade different components of the S&P 500. In this case, obviously, this is the E-mini Real Estate Select Sector Future. It gives you access to companies in the GICS real estate sector, including equity REITs, real estate management, and development. So again, these are E-mini futures out there. No real options volume to speak of yet, but the real estate sector coming under some pressure this week, off nearly 3.5%. And again, making its first appearance in our movers and shakers here. Hopefully we'll get some options on these, and then we can start talking about them on the TWIFO show on the regular. But for now, you may be surprised that they even exist. And they do. There you go. That's why this show exists, listeners, to surprise you sometime. Number 4 probably won't come as a surprise. It's been rocking and rolling a lot of late. We're going out to the metals now. It is platinum coming in at number 4, off nearly 6%, 5.91% to the dark side. It was number 3 in the same direction last week, off a little over 2%, so a rough couple of weeks, off nearly 8% for platinum. Number 3, we're staying with the metals, listeners. It's silver, off 6.35%. It was number 5 in the same direction last week, off about 1.75%. So again, off nearly 8% on the last couple of weeks for silver as well. So a rough couple of weeks for silver. Number 2, still staying in the metals. Got a metals trifecta here. Palladium, the other P metal. That's also been rocking and rolling a lot of late. Number 2, palladium, off 7.14%. So rough couple of weeks for a lot of metals out there. And again, palladium coming in at number 2. Number 1 to the dark side this week, going to the ags, to the beans, in particular soybean oil, off 7.67%. It was number 2 in the other direction last week, up 11.09%. So giving back a good chunk of what it gained last week, but still number 1 to the dark side. So wow, an interesting, a little bit surprising dark side this week. Real estate sector making it into our dark side top 5 movers and shakers. Interesting. Again, you never know what you're going to find on the show. That's why you get to tune in every week. Now, to the light side we go. We're staying in the ags, listeners. So number 5, it is corn, up 7.4%. All right, behind it, number 4, still in the ags. KC wheat, up 8.22%. Number 3, still in the ags. Soybean meal, up 8.7%. Very intriguing how we have the different components in the soybean complex moving in different directions. The oil off nearly 8%, and the meal up nearly 9%. interesting week. Number 2, still staying in the ags. It's Chicago wheat, up 11.33%. You knew if KC wheat was lurking there, Chicago wheat not going to be far behind. And then number 1 to the light side, leaving everything else in the dust this week. Also, the only one of our 3 frequent offenders making the list this week, it is Bitcoin. My goodness, up 17.69%. Last week, it was number 1 in the other direction, off 6.29%. So Bitcoin, as we're kicking off the show, back above the 30K level. My goodness, a lot of action out there. So I think we have to start in crypto first.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, listeners, let's get rolling. Let's head on into our favorite part of the CME website, cmegroup.com/TWIFO. All the other parts are good, but hey, I'm partial to this one because these are the reports that we use to run the show. Head on into that drop down, listeners. You're going to want to pop out of ags at the top there, go down 1 slot to cryptocurrencies. And then in product family, we're going to hang out in the big indexes first. Of course, Bitcoin. We'll see what else we explore from there. But yes, banger week. In fact, looks like we had a decent trade just go up since we started looking. Wow, there were about 1,000 contracts on the tape. Now 1,400. So almost 500 contracts piling in just since we started the show. So some action out here in good old BTC. And again, a lot of that because we're back north of that psychologically important level, 30,225 in that future. As we're kicking off the show, up nearly 4,000 handles, 3,780. 14.3% just since Monday. Of course, you go back to our show last week, up nearly 18%. So my goodness, quite the resurgence. You know, if you've been paying attention to our crypto rundown program or just to the crypto space in general, you know they've come under attack, regulatory side, going after Coinbase, going after Binance. The headlines have not been good of late, listeners. So to see Bitcoin make this resurgence back to the 30K level, very, very intriguing. In fact, we had our guest last week, and he was saying if he had heard all of the headlines that we've had out there, he was surprised that it was hanging out at the 26,000 level at the time. He would have thought it would have been lower, way below 20,000. So now to make it back above 30,000, an intriguing time out there in Bitcoin. Vol also getting a little bit juicy. Let's go to that front June contract. It has about 9 days to go, actually about 8 days to go. That's where the lion's share of the action, 38% going up this week. Again, almost 1,500 contracts on the tape. It's not the most active week we've ever seen, but this is also a product that used to do 20 contracts a week. So 1,500, nothing to sneeze at. I'm sure if we reacted again by the end of the show, we might see more because things are rocking and rolling out there right now. But 38% of that paper going up in that near-dated contract, again, makes sense. Bitcoin exploding nearly 4,000 handles in a week. You want to have front-dated, near-term, high-gamma contracts in your back pocket on a week like that. The vol shooting up 53 right now, up 10.65 points. So again, you've been listening to our Crypto Rundown show. Didn't do it this week, of course, because of the holiday. But vol, we've been saying for a while, kind of anemic, kind of a time, and maybe you want to keep your powder dry on the options and premium harvesting side and maybe start buying some options. And that certainly was the case this week. Bitcoin moving and vol popping this week, 53. Still fairly low for Bitcoin. We've seen it in triple digits before, but not quite in the low 40s that it was a week ago. Skew-wise, last week there was no bid to the puts. They were pretty much flat. The calls were 3% bid. This week, the puts starting to rise into action, 5.3% bid. So a little bit of a bid creeping into the puts. That's kind of intriguing, given the fact that we've exploded to the upside this week. Maybe some folks fading this out there. It's kind of interesting. The call is still remaining relatively bid. They were 3% bid last week, 2.2% bid this week. Again, the call is not exploding, though, either, which is also kind of intriguing. Well, what is exploding, though, are the 35,000 calls in December. Those are pretty active. I think that's where the print we see. Yeah, this print went up today. That went up right as we were talking. That's where that 500 or close to and 450 contracts came from. It was a 35,000, 45,000 December vertical going up 225 times today. So 225 contracts of that going up today, all opening. So you like that, listeners? 35,000, 45,000? That would have sounded pretty far out of the money just even a week ago. But now here we are back north of 30K. So north of 35,000 by December. I've seen crazier things out here, listeners. Intriguing. We also have, in terms of action, the 29,000 calls. So now in the money calls, lighting it up Looks like paper closing some yesterday and putting up another same amount today, 80 each. That's kind of interesting. 162 of those going up total this week. So taking off some 29,000s yesterday. There's about a couple hundred still open on this strike, so they could be unleashing some day after day as we continue to rally. It makes sense. We blew through their strike, so taking some profits off the table maybe, or maybe if they overwrite those, maybe they're scrambling for the exit. Either way, intriguing stuff out there. Let's go to the micros as well. I know for a lot of you, that's where you would prefer to play. You're not slinging 5x multiplier Bitcoin contracts. Decent paper out there as well, about 5,000 contracts on the tape right now. And again, keep in mind, truncated trading week. We were all off for the Juneteenth holiday. That's one of the issues some folks have with the CME products. They will close during the holidays, whereas crypto, otherwise, usually 24/7, around the clock there. So intriguing stuff. So all these numbers would be good on a normal week. On a truncated holiday week, these are pretty darn impressive. Nearly 5,000 contracts on the tape for the micro Bitcoin. And again, micro Bitcoin hanging out right around the same level. The vol here, 52 and about a third. So again, it's exactly the same in that contract, that June contract that has about 8 days to go. 41% of the paper going up in that same contract. So that's where the action was out here this week. Let's see, skew-wise, looking exactly the same as well. 5.3% bid are the puts, 2.2% rich are the calls. So everything very similar here. In terms of action, the big dog out here this week, well, there were two actually. Looks like it was the 34,000 contracts going up, the 34,000 strike calls going up 510 times in August. That was the big dance out here, the big dog in the micro CME contract. Interesting. Looks like it went up on Wednesday, all opening 510 times. It's like it had 137,000 calls going up the same time as well, also opening. Doesn't look like it was any sort of ratio. Just went up on the same day. No paper today, so that's kind of par for the course with these contracts. They trade in fits and starts. Then we also have the 34,500 calls. Mouthful strikes here, listeners. Going up 752 times this week. These are the ones going out in 8 days. Going up, again, all of that yesterday, all opening. So people piling into those contracts yesterday. Again, nothing today, nothing on Tuesday. So all this paper we're going to talk about actually was all yesterday. Weird. Nothing really going up on Tuesday and nothing really going up today. So just a flurry of activity yesterday, listeners. So that was actually the big dog this week. 752 of the 34,500 calls expiring in about 8 days. It's like a lot of upside here. Not to be outdone, listeners, we have the July 33,000 calls going up nearly 400 times this week. Again, all of that yesterday. Nothing today, nothing Tuesday. These calls have about 36 days to go, so a little bit longer time frame there. So kind of all over the place, but it does seem like it's all calls all the time out here. If you want some near-dated puts, looks like it was the 29,000 puts that go away in about 4 days. They did 100 contracts this week, and the 29,000 puts that go out in about 5 days, they did 200 contracts this week. So a little bit of paper on the put side. Again, all of that Wednesday. Very little paper today across the board. So kind of interesting how just the explosion of paper, not the day after we reopened on Tuesday, but actually on Wednesday. So intriguing stuff to be found here. Let's look really quickly just because we're in crypto. Let's see if anything going on in the world of Ether. Let's go out to the micro. Nearly 9,000 contracts on the Ether front. Ether hanging out nearly 1,900 right now. So nice run for them as well. Up about 10%, 173 handles on the micro side. The big dog out here, these 1,800 calls in September, going up nearly 5,000 times this week. So that's a lot of paper for this contract, including 3,500 on Monday, all opening, 1,240 today. So again, looks like opening today as well. So interesting. People piling into that 1,800 strike. Are they overwriting it? For their sake, I hope not, listeners, because we are well through it now. They could be aggressively fading. You never know. But intriguing stuff out here nonetheless. So yeah, some action out here in crypto this week. And again, our number one light side mover. Let's keep on rolling. If you look at the rest of our movers and shakers this week, they're dominated pretty much by two complexes. We've got ags and we've got metals. So I think we'll go in alpha order and head out to the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. A lot of ags lighting up our movers and shakers this week. Soybean oil to the dark side, corn, KC wheat, soybean meal, and Chicago wheat to the light side. Because we have the big dog on the list this week, corn up 7.4% since our last show. I think we have to start out there. And again, bear in mind, this is a shortened holiday week, so we have one less trading day. Usually you see corn a good week, 400,000 contracts, maybe 450. And that's on a regular trading week. Right now, listeners, almost 1.1 million contracts on the tape for corn. So corn exploding. And they had one fewer trading day this week, listeners. So that's a ton of paper on a normal week, let alone in a shortened holiday week. So we really have to start with corn this week. Where is corn hanging out, listeners? That front future, 658 3/4, up 18.5 handles, or nearly 3% on the week. Obviously, if you go back to the end of our show last week, up over 7%, about 7.4%. Now, this explosion of paper, about 30% of it is going up in the D's contract. It has 155 days to go. So very much the polar opposite of a lot of the other contracts we talk about, listeners, where it's all very near dated. Got to get that high gamma trade in. Could be crypto, could be equities, pick your poison. Everyone's living in near dated contract these days. Not so much in the ags. They trade a little bit different rules of engagement out there. And that is the case again this week. The D's contract leading the dance, 30% of that explosion of paper, 1.1 million contracts going up in D's. Where's the D's future in corn? 620.5, up 23 handles, or nearly 4% on the week, 3.85%. So, again, big move out here for corn. What's the vol in corn? Looking pretty frothy, 34.65, so almost a 35 in corn vol, up about 2.6 points on the week. And again, if you're lamenting equity vol kind of in the toilet, a lot of the other products we're looking at, mid-20s or below when it comes to vol, very few even in the 30s, let alone above it. So corn looking respectable from a vol level here. Let's go to the skew, see what's going on out there. Last week, it was all about the puts. Nearly 6% rich were the puts, only 2.8%. Actually, they swung the other direction this week. They're down to 2.8% cheap, so a pretty big swing in the puts this week. Calls last week, 4.7% cheap. This week, again, swinging in the other direction, 3.7% bid. So they've gone from 4.7% discount, listeners, to 3.7% premium. So again, intriguing swings in the past week. The puts were leading the dance last week. The calls leading the dance this week. And again, given the pop we've seen out there, kind of hard to argue with that. Looks like the big dog out here, we're hanging out at a 620 in that D's future, listeners. The big dog out here in this just explosion of paper. I don't know if I've ever seen a 1 million contract week and north, let alone I've never seen a holiday week with this much paper. So this is a lot in corn, listeners. The big dog this week, the par calls, the 700 calls in December, going up nearly 26,000 times. The big day for those, Tuesday, 11,000 on Tuesday, mostly opening, almost 10,000 on Wednesday, slightly closing there, and then 5,100 today. So a lot of paper going on out there. Still a bit of a ways from the par strike out there in December. Got about 80 handles to go, but intriguing stuff nonetheless out here. A lot of action on that strike. Right behind it, we have the 600 calls. This makes a little bit more sense. These are now in-the-money calls. About 9,000 on Tuesday, mostly opening there. 9,500 on Wednesday, closing there, so opening and closing. Interesting. Same thing as the par calls. And 3,600 today. So intriguing stuff. It's not all calls all the time. They've got some puts lighting up the top 5 here as well. The 500 strike puts. Pretty far out of the money now, going up almost 21,000 times this week. Bit of a tie between yesterday and today, slightly more today, 8,600 today, 8,300 yesterday, 3,500 on Tuesday, all opening all week long. So interesting. Opening on some pretty far out of the money puts. Are they overriding the heck out of these? Are they loading up, thinking this rally in corn is not going to have any legs? Interesting stuff here in corn, listeners. Let's scroll around a little bit as well, see if we can see any other big trades. And you know what? There are some closer to home. If we go out to the August 450 puts, these go out in about 29 days. These went up 14,000 times this week. The big day for these, Tuesday, 7,100 on Tuesday, 6,600 on Wednesday, about 500 today. Opening all week long on these 450 puts. So again, even farther out of the money puts, lighting it up out here. Very interesting kind of paper across the board, which again, you got over 1 million contracts. You can kind of expect that. Also got some calls here in the August time frame. Got about 12,300 of the 650 calls going up. 5,700 actually on Tuesday, 4,300 on Wednesday, 2,300 today. Opening all week long, so kind of just opening across the board, which again, we have just an explosion of paper. Not exactly surprising. Let's jump around again. Let's go to September first. There's so much paper, listeners. Let's go to the September 600s, the other pars. They were pretty active this week as well, going up 12, nearly 13,000 times. Looks like folks bailing on these. So again, we broke through this strike, taking some of their calls off. Either they overrode them and they're scrambling to cover their risk, or they're sitting on some longs, maybe making some money, taking some profits. Either way, 7,300 on Tuesday, 4,000 on Wednesday, about 1,300 today. Looks like closing all week long. Again, as you blow through the strike, people taking their money, maybe getting the heck out of Dodge, makes a certain amount of sense. Right behind it, we have the 700s also going away in September, going up about 12,000 times as well. The big day for those, actually Wednesday, 6,700 on Wednesday, 3,700 on Tuesday, 1,200 today. So there could be some rolling going on because the 700s are all opening, 600s all closing. Some folks rolling from the 600s to the 700s certainly makes some sense there as well. My goodness, a lot of action out here in all things corn. Listen, you probably spend the rest of the show talking about all this paper and corn, but I know you ag heads want us to squeeze in some others as well. So let's jump out of the big dog, which is corn, listeners. Let's stay in the grains and oil seeds. Let's go on over to Chicago wheat, a.k.a. SRW wheat, one slot below it. Pretty active week for that one as well, all things considered. Again, truncated holiday week, 215,000 contracts on the tape so far for Chicago wheat. So that's a good week in any week, let alone shortened week out here. Where is that front wheat future, listeners? 739 and a quarter, up 51 and a quarter, nearly 7.5% just this week. Of course, you go back to the end of the show last week, it's up over 11%, 11.33%. So a lot of paper. And Chicago wheat trading very much like an equity, doing its best E-mini impersonation right now because 57.5% of that paper going up in the contract that's expiring in one day. So, wow, a lot of near-dated paper out here. Normally, I wouldn't sink my teeth into this stuff, but kind of hard to ignore it when over half of the paper, nearly two-thirds, is going up in this one contract. What's the vol on this contract, such as it is with the day to go? 50.5, up 7.25. If we scroll a little bit farther out, let's go out, let's say a month, listeners, that vol still respectable at about a 42.5. So, juicy ags right now. So, again, if you're looking for a little bit more vol, and you want to move a little bit farther afield from some of the other products we talk about, maybe the equities or the metals, you're not finding the vol levels you want, allow me to present the ags for your consideration. The big dog this week, I won't even bother with the skew. With skew with 1 day to go. I'll do it really quickly. The puts last week, 1% bid. This week, 1.5% bid. The calls, 1.8% rich last week. This week, nearly 5% rich. So the bid is to the calls, which, again, not surprising. Seeing a nice bit of upside here in Chicago wheat. The big dog, the 740 calls going away tomorrow. 15,500 of these have traded so far. Most of that on Tuesday, 11,000 of them, mostly closing there. 2,700 most of that on Wednesday, 11,000 going up in there. Again, the shortened week, listeners. Tuesday, 2,700, 1,500 today. So intriguing stuff here. Right behind it, we have the 755, so the 7 double calls. Going up 6,500 times on Wednesday, 4,500 times today. Total of a little over 11,000. No paper on Tuesday. Again, mostly opening on Wednesday. So, again, a lot of action in these very near-dated contracts. And we also have about 10,000 of these 7 halves going up this week. The big day for those also Wednesday, 5,900 on Wednesday, 2,500 today, and about 1,000 on Tuesday. So, wow. Interesting stuff. Interesting stuff across the board here. Listeners, tell you what, let's go out. Let's look really quickly to see if we see any longer dated paper. And we do. If we go out to the August and September contracts, it's the 850s 850 calls leading the dance, about 3,500 times each this week. That's kind of intriguing. And we bring up the rare. If we go all the way out to, let's say, July of next year, we got the 7/2s trading for a little bit of size. And the D's contract, it's the 800s going up about 1,500 times this week as well. So a lot of paper across the board, but most of it in this very, very near-dated side. You don't see that too often in ags. So intriguing stuff out here. Before we get out of the ags, since I mentioned soybeans are leading our dark side this week, let's do a little bit of the old soybean oil as well. Pop out of SRW wheat, go down a couple of slots to soybean oil. Again, a pretty robust week for this one as well. Shortened week, you would never know it from these volume numbers, listeners. 118,000 contracts on the tape already for soybean oil. Where's that future right now? The front future, 55.85 off 385, or about 6.5%. Also going out in a day, and also doing nearly half of the paper, 45% of the paper going up in this contract that has only a day to go. It's interesting because there are no weeklies here, so it's really just this contract or the August contract that has about almost 30 days to go. So not a lot of options, pun intended, out here. And it looks like leading the dance out here, by the way, what's the vol out here? It's a 48.5, and that contract going away tomorrow. You go out a month, it's about a 36.5, coming in about 3.6 points. So intriguing, still fairly frothy from a vol perspective at a 36.5, but obviously that near-dated contract looking even juicier. And was the 54 puts going out tomorrow that was leading the dance in soybean oil. It's like closing all week long. The big day was Wednesday, a little over 3,000 going up on Wednesday, 1,300 today, about 900 on Tuesday. It's like folks were bailing on these puts pretty much all week long. Right behind it, we have the 50 puts going away in August, so in about a month from now. They went up 4,300 times this week, mostly opening there. So maybe we have some rolls from the 54 puts going out tomorrow to the 50 puts going out next month. Either way, opening all week long, 2,400 on Tuesday, 1,000 yesterday, and almost 1,000 today. So intriguing paper across the board. And not to be outdone, we also have the 60 calls going up in December, going up 4,500 times this week. Almost all of that on Tuesday, 4,486 on Tuesday, and then a whopping 75 on Wednesday, and a goose egg today. So pretty much all of that on Tuesday, most of that opening. So folks piling into the D60s 4,500 times on Tuesday as well. Paper all over the place here in soybean oil, which is always fascinating to see. Let's keep on rolling. We said metals are lighting it up, so let's head out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, let's do it. Let's get on into the shiny stuff. Pop on out of that drop down, listeners. Get on out of ags. You're going to go down almost to the bottom of our list. One from the bottom to the metals. We're going to hang out in precious. We got a lot of metals lighting it up this week. We got platinum, we got silver, we got palladium. If you listen to the show, you know only one of those really trades any size. So let's go on out to silver, off 6.35% this week, coming in 22.44 right now, off about $1.68 on the week, or nearly 7%. Again, if you go off to the end of our show last week, off about 6.33%. Rough week here for a lot of the metals here. But silver leading the dance. Let's see how much paper going up in silver. 22,500 contracts. So again, for all the noise silver makes, it's being outpaced from a volume perspective this week by just about everything else we're going to talk about, with the exception of crypto. We saw ags blowing the doors off of it. Equities clearly do. We're going to talk about those in a little bit. And then, of course, even corn. My goodness, don't even get me started on how much paper is going up in corn. So silver gets a lot of mind share. The market share in terms of volume, not quite there yet. Only 22,000 contracts on the tape this week. Of that, 41% going up in the July contract. It has about 5 days to go. What's the vol in silver right now? 22 2/3. So the vol right now in silver, 22 2/3. Very close to the underlying level out there. Kind of interesting. Up about 1.2 points on the week. Skew-wise, the puts 2.4% bid last week, 1.4% bid this week. The calls flat last week, 3.4% bid this week. So that little bit of premium we expect in the precious metals starting to trickle back in. But in terms of action, again, kind of a scattershot week looks like the big dog out here, such as it was, the 23 puts going up nearly 1,000 times this week, almost all of that on Tuesday. And for opening for size, nearly 800 contracts, such size as there is to be found in silver. So again, those are looking pretty good. If you were opening on the 23 puts from a buying perspective, which I'm assuming this probably was on Tuesday. I said Monday before, of course, I meant Tuesday. Shortened weeks, listeners, wreak havoc with the data. But yeah, if you're opening 23 puts in silver on Tuesday, you're probably a happy camper right now, as we've obviously blown through that strike and then some right now. It probably explains why they were taking some off on Wednesday. Not much trading today, so they still have a good chunk open and probably a bit of a smile on their face if past is prologue out here. Let's look a little bit farther. We also saw the 23 quarter puts also opening about 600 contracts on Monday as well. So could have been a bit of a vertical, but that's a pretty tight vertical. 23 quarter in silver. I mean, we've seen stranger things, but that would surprise me if that was what was going up out there this week. But we saw the 23 quarter puts also opening for some size on Tuesday, taking some off on Wednesday, not much going up today. So looks like probably some happy faces. Even if you bought that put spread, listeners, that quarter of a point wide put spread, why you would do that, I don't know. You're still happy because that put spread's looking at max value right now. So again, a weird spread if that was the case, but we've seen weirder things out here. Let's scroll a little bit farther, see if we see any other paper going up out here this week. 22 half puts in August going up about 500 times. Also pretty active. Those are pretty active all week long, actually, and opening all week long, which makes some sense. We're pretty much threatening that level right now. And we also saw the 27 calls in September going up about 500 times this week. Almost all of that today. Looks like maybe some folks bailing on those calls, deciding 27 by September, a bit of a bridge too far. So intriguing stuff here across the board here, listeners. We touched on some metals. We touched on some ags, touched on some crypto, but we're not done. Remember I said we're going to be joined in the hot seat by our old friend, Miss Catherine Yoshimoto, the director of product management over there at FTSE Russell. Talk about all things recon. How often do we get a chance to talk about, I don't know, Apple, Tesla, Microsoft, tech on TWIFO? Not too often, usually once a year, right about now. So let's get to it, listeners. A little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome back to the equities. A lot going on out there in the world of equities right now, particularly when it comes to a certain segment we like to talk about on this show. Of course, all things Russell 2000 and the various constituent indices around it. A lot going on out there because, of course, it is Russell Recon time as well, listeners. So we thought who better to join us this week in the old CME Group hot seat than our old friend Catherine Yoshimoto, the Director of Product Management over there at FTSE Russell. Catherine, welcome back to TWIFO. It has been too long.
Yes, thank you, Mark, for having me.
Catherine, let's start at the top. It's been a while since we've chatted, probably last year's Recon, if I had to go do the math. So it's been a little bit. We obviously have a lot of new listeners to the show, and obviously this is a big time of year for everyone investing and trading and watching all things FTSE Russell. So let's start at the top. Let's lay it out for some of our newer listeners. What are we talking about? What the heck is Recon, Catherine?
Sure. Russell Recon is the annual rebalance of the Russell indexes. Because markets change, it's important that accurate benchmarks continue to reflect changes, are updated to reflect changes that have occurred in the market. So Russell's process is to update the indexes annually in June. Now, this year, the rank date was April 28th, 2023. We announced the preliminary additions and deletions on May 19th. And, you know, we've had a query period where the market gets to question and get clarifications on the additions and deletions. And then now we are working toward the close of the rebalance on this Friday, June 23rd, where, you know, the reconstitution changes to the Russell indexes like the Russell 1000, Russell 2000, which make up the Russell 3000, will be implemented at the close, effective at Monday's open on June 26th.
All right, a lot to unpack there. And one of the reasons I like to talk about Recon here on the show is because it embodies and encapsulates a lot of the shifts that have gone on in the equity market over the previous 12 months. It's all broken down there in the data if you want to look there, listeners. So let's get into that a little bit, Catherine, because there's always some fun nuggets, some fun surprises to be gleaned from looking at the data. So let's start there. What were some of the interesting shifts you notice in this year's Recon?
Yeah, absolutely. The shifts, maybe a prominent one in terms of number of companies graduating in cap, going from smaller size segments to larger segments was healthcare. So healthcare had the highest number of stocks coming out of the Russell 2000 into the Russell 1000 because they've grown in size. And similarly, from the microcap index to the Russell 2000 because they've grown in size. So healthcare was a interesting spotlight among the shifts that we saw in the changes. Also, the energy companies became more small cap value because although they were last year's standout performing sector industry, if you will, because of inflation, they've struggled a little bit more earlier this year. If you look at the year to date, energy hasn't done as well as large cap tech companies, which have actually become more growth. So we see Alphabet and Meta, for example, going from partial value to 100% growth. So they're the biggest deletions from the Russell 1000 value index. Those are some of the sector shifts in terms of like high level observations. But if you look at the percentage weights across the indexes, they're relatively stable. We're not looking for, target weights for the industries and sectors. They're, an outcome of the roll-up of the stocks in the index. And so you see some shifts here and there, like, bigger weight in tech, for example, Russell 1000 growth. But largely they're fairly stable if you look at the big picture.
A lot to unpack there as well. First off, healthcare, that's kind of surprising. The narrative we hear day in, day out with the markets is everything giant tech, right? So to see healthcare sneaking up there is kind of interesting. I want to come back to that narrative about the giant tech in a second, but you hit on something that may be intriguing to a lot of our listeners. And I know whenever people talk about and write articles about Recon, they spend a lot of time analyzing the shift between the two segments you just outlined, the growth and the value. Maybe break that down really quickly for our audience. How does FTSE Russell define growth, and how do you define value, and how do you determine what falls in which camp?
Yeah, so Russell style indexes define growth and value based on three variables. One, value, book to price, which was the variable used since the inception of the Russell style indexes. In the 90s, a growth side was added, the long-term growth was added in the mid-90s to offset the book to price because, Russell research found that book to price was not adequately capturing the growth side of the market. So what the Russell style index's objective is to split, let's say, the Russell 1000 or Russell 2000 into roughly equal parts of growth and value. Now, the introduction in the 1990s was also, in terms of methodology enhancement, was also the middle portion of the growth and value indexes, meaning some stocks are in the middle. They share characteristics of both growth and value. So some stocks, I mentioned Meta, for example, was last year's headline company in terms of they went from 100% growth to partial value. So that's how stocks like that end up in the middle because they're kind of, the metrics are putting them more toward the value side last year for Meta, for example, but they're back to growth because of the increase in tech, and the rise in tech earlier this year that you just alluded to. So at a high level, the Russell 1000 indexes intend to capture 50-50 roughly growth and value. And then stocks, about 30% of each index, each side of the index of the Russell 1000, for example, are purely growth or value. These indexes provide interesting information in terms of the market direction. And like I alluded to, the Russell 1000 growth index is seeing more tech names come back into it.
Yes, a lot going on out there. You mentioned the tech names. Looking at some of the other data points coming out of this year's Recon, no surprise to anyone, I'm assuming, Apple, Microsoft, Alphabet, and Amazon still at the top of the list. They're the largest four companies. Berkshire Hathaway, though, sneaking in there. That's kind of a bit of a surprise, actually knocking Tesla out of the number 5 spot. We don't really talk about Berkshire Hathaway a lot on the network because it's not a huge options volume name. Tesla, however, is. It dominates our most actives almost every given trading day out there. So to see Tesla kick to the curb a little bit probably will surprise a lot of our audience out there. What won't surprise you is that for the second year in a row, Apple, Microsoft, total market caps above $2 trillion. It just seems like we just crossed the 1 trillion threshold not too long ago, and everyone was very enthusiastic about that. Now here we are, two companies, $2 trillion market caps, widening their lead over the number 3 spot, which is Alphabet out there. You know, Catherine, I want to get your thoughts on that narrative a little bit as well. We touched on it a few times here, big tech kind of being the story of this year. I don't care where you look in the financial media, financial analysis, this story keeps coming back to 6 or 7 big, mostly tech names seem to be strapping this market on their back and just carrying it north. Everything else be damned. Damn the torpedoes and full speed ahead for big tech. And everything else may be kind of languishing, maybe even falling a little bit. But those big names, which constitute so much of the major indices, continue to march north and carry everything else with it. So I'm curious for you. You've been doing this for quite some time. What are your thoughts on this stratification of the market here, where this top layer is kind of doing its own thing and carrying everything else with it, and the rest of the market, maybe not? And then also, have you ever seen the market this clearly delineated in the past into a handful of enormous winners and then everyone else, Catherine?
I mean, it does seem like an unprecedented market in the direction it's going. I would say like there are probably two camps, those who want to avoid the large tech companies and those who want to focus on those tech companies. So we do have, at FTSE Russell, we do offer a variety of indexes. You know, sometimes we exclude technology, for example, or some clients want to exclude different industries. A few years back, some clients were asking for the Russell 3000 or Russell 1000 index, excluding the top 50 mega cap names. Now, on the flip side, we do also have the Russell top 50 mega cap index. So some clients may focus there. And now also as part of our governance and oversight, you know, our policy team confirms, you know, like that's some questions that have come up with our committees in terms of like potential methodology enhancements or, you know, concerns that might be raised. A few years back, they did, do some consultations around should we be capping some of these big names. And the response back from the market was no, the benchmark indices should reflect what the market is doing, what is available in the market. Instead, what we have been seeing some demand for is capped indices. So we've been offering, like, let's say the Russell 1000. iShares uses these in their sector ETFs, the Russell 1000, financials or technology capped indices, because, you know, they want to cap, because for implementation, for ETF implementation, a capped index might make more sense to, you know, diversify the exposure a little bit. But yeah, the feedback from the market has been let the weights reflect what the market is. So that's what we are, doing with the standard Russell 1000 and 2000 indices, and then, you know, offering additional indexes that apply additional capping methodologies, for example, or different size segments within, like the Russell 1000, cutting it into not just the top 200 and mid cap, but also the top 50 mega cap.
Interesting. So you do carve it up in different ways, but you got to keep the big ones in there, Catherine. That's what brings people to the dance at the end of the day, right? They want to see their Apples
absolutely.
and their Microsofts. They don't see those. They might take issue with that. But, you know, it's been an interesting year. We just talked about the big side of the market, the tippity top of the Russell 1000, but a lot of our listeners are coming to the Russell mostly through their engagement with Russell 2000. That's usually the flavor we talk about the most on this program, looking at the RUT options, which, by the way, I'm pleased to say, has seen a lot of growth out there since the last time you and I chatted. It used to be we would see maybe 15, 20,000 in a pretty active week out there for the Russell 2000. These days, we were just talking about it recently on the show, over 50,000 contracts. So we are starting to see some growth. A lot of that driven by what was, until the last couple of weeks, some dramatic underperformance we saw in the Russell 2000. As recently as just a few weeks ago, Russell 2000 was still down on the year, while a lot of the rest of the other indices, as we mentioned, carried by these Magnificent Seven, whatever you want to call them, have been robustly green on the year. Russell 2000 was struggling, was red or mostly unched until just really a few weeks ago, the beginning of June. And now we've seen a dramatic catch-up, a dramatic resurgence just really in the last 3 weeks, Catherine, with Russell 2000 shooting up, now up nearly 6% on the year. So it's been fascinating to watch this, I guess you can call it lagging for a little bit, underperforming, and then all of a sudden in the last month or so, Catherine, just catching up to everything in the market and maybe even exceeding some names out there. So what are your thoughts on the, I guess, relatively tepid performance of small caps earlier in the year and now this very amazing resurgence just in the last few weeks, Catherine?
Yeah, I think we're seeing the small cap premium come back to life recently. I think it really is the Russell 2000 in particular is an interesting index because there's this robust ecosystem of products around it. We had actually guests from SIBO and CME on a webinar, a derivatives focused webinar recently, and Rick Rosenthal, SIBO, pointed out they have a product called RVX, which is the fear index for the Russell 2000. But if you look at that, June tends to be a very low volatility month for the Russell 2000, but for the markets in general. It's an interesting data point, and he talked about the popularity of like mini options, and then same with Paul Woolman and Tim McCourt of CME. They both talk about futures and the increase in popularity of the futures as well as the dividend, Russell 2000 dividend product that they launched fairly recently. So there's this robust ecosystem. You could do a lot with it. The market participants are probably also, shorting, for example, using securities lending programs. Our partner, our ETF partner, iShares, they talked about like some availability of options and securities lending for major institutional clients, right? So there's a lot that you can do with the Russell 2000 index, and the volatility actually allows for the harvesting of volatility. So it is an interesting index. And then just getting back to your point about healthcare, it does have like more domestic companies within the Russell 2000, getting 20% of revenues from outside the U.S. And for the Russell 1000, 40% of revenues outside the U.S. But then healthcare looks different because if you look at Russell 1000 healthcare names, they're mostly larger pharmaceutical companies. For the Russell 2000 healthcare names, they're a lot of times they're smaller biotech companies doing more innovation. It's an interesting index, and you can do a lot with it depending on what your strategy is.
It is an interesting index, also more volatile, as you point out, which is one of the reasons it definitely is on the radar of a lot of our listeners out there who are looking for a little bit more volatility to drive their options trading. And thankfully for them, a lot more volume coming in on the options front as well, which makes it much easier for them to trade. Well, Catherine, I appreciate you joining us here a little bit outside our normal recording time to talk about all things Recon. I know your schedule is very busy this time of year. But before we go, Catherine, if there's any other little nuggets or takeaways that you want to leave with our audience when it comes to all things Recon, now is the time. The floor is yours.
Well, I appreciate you having me on to talk about Russell indexes. And, the annual reconstitution is a very important part of making sure the Russell indexes continue to reflect the markets. It is here to stay, a really valuable part of the index maintenance process. So thank you for having me to talk about it.
And where should folks go if they want more information on all things Recon or all things Russell 1000 or 2000, Catherine?
Yes, thank you for asking. FTSERussell.com and is the website that you should go to look for Russell indexes information. There is a specific reconstitution landing page where you can see the Russell 3000 and Russell Microcap additions and deletions. And also a preliminary summary that summarizes some of the changes I talked about here today, as well as helpful infographics that talk about through the process, as well as the webinars that I mentioned earlier. Those are posted on that reconstitution landing page as well. So feel free to check it out. And then, feel free to send an inquiry to info@FTSERussell.com if you'd like more information.
There you go, FTSERussell.com, the place to go to learn more. Give them a follow on Twitter at FTSERussell, also out there as well. And, of course, if you want to see all the options action we were just referring to, cmegroup.com/TWIFO, and then scroll on down to the equity indexes. Then in product family, U.S. Index E-mini, and the third from the top you will find the Russell 2000. Well, that's going to do it for us on TWIFO this week. I want to thank our guest, Catherine Yoshimoto from FTSE Russell, here joining us to give us a little bit of light, a little bit of insight into all things recon. Of course, again, you know where to go to find all these reports we mentioned on the show every week, cmegroup.com/TWIFO. That's going to do it for us on the network today as well. Back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. And after that, for all of you in the Options Insider Pro, you'll be joining us for Options Oddities, where we break down the entire week from an unusual activity perspective. And then back again next week on Monday, kicking off our content week all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.